Hey, what's up, everyone? It's Josh Flores from Wall Street Saturday. I just want to thank you guys for checking out the video this week. If you can, please support the channel by liking the video and subscribing. And I just want to inform everybody that everyone on this video are not financial advisors, nor anyone's financial advisors. Anything that's said or seen on the show is strictly for educational purposes only. With that being said, please enjoy the show. Hey, what's up, everybody? Thanks for joining us again for another Wall Street Saturday. It is May the 28th. We got an exciting one for you. We've had an exciting time in the week. Before we get started, I just want to introduce myself. I'm Josh Flores.
I'm Joshua Trusty.
And I am Misael Gonzalez. So for this video, we just want to touch back on what we've been seeing in the market and to answer the question of whether we have bottomed or not. So one of the things that we've been tracking is previous drawdowns that we've seen, at least in the S&P, which is an index that we like to follow. So looking at, again, previous drawdowns with COVID being the biggest one, which is around down 30%, we said that we were looking to be at a drawdown of around 18 to 20%. And so finally, we did that, I believe it was last Friday. So if we take a look here at this chart and we go from the peak that happened in or around the end of this year and at the beginning of 2022, and we go towards May 20th, okay, which was last Friday, we said that we did close down 18%, but in fact, we were down 20% intraday. It just happened that we were able to finish higher as we did bounce from that low. And then obviously, if we look at the 5-day chart or the 1 month chart, we can see that from the 20th to now, we've been up 6%. So yeah, that's one of the things that we were tracking. We're looking to get that 18% drawdown, which we did. And I think at this point, if you look at some of the major players, particularly Amazon, I think that was really close to its 52-week low. Same thing with a few of the other big cap players. They seem to be really cheap on the 20th. And so for those reasons, I think we have reached the bottom in my experience, right? I think I would still be careful. We still don't know which companies their guidance is going to be adjusted positively or negatively. But I think it would be a safe bet to just start to get into those investing waters little by little now that we saw this activity going on. So that was one of the things that we were tracking. I don't know if you guys have any initial thoughts on that.
Yeah, one thing I wanted to share was just like going back to like the chart for SPY. Let me share it quickly. Can you see my screen? Cool. So yeah, this is like the chart for SPY. One interesting thing is that the standard deviation has actually been decreasing. So now it's around 14 versus where it was like a couple weeks ago, right around like 21, 24. And now we're also seeing like that the MACD is actually starting to cross over as well. So what we have for the like for this is like we have like the signal line, then we have like the trend line, and that those have like crossed over. So now it looks like we're beginning to, and this is like a bullish signal as well. In addition, we can still see that like the 50-day moving average here is still above where we're currently at now, but we've also gone above our 10-day moving average for SPY, and it looks like there's also two different like resistance lines. One here at around 415, around like 417, and another one like around like 427, 428. So it'll be interesting on Monday to see if we break through this and potentially break through the other resistance line later on in the week. I think that would like further confirm that we have reversed our trend and are actually back on our way up for the long term, for the longer term. So yeah, that's just one thing I've been looking at as I've been taking a look at the chart for SPY, which is the Spider S&P 500 ETF.
Right. Yeah. Another thing that did come out this week, actually on May 27th, that was actually this week, stating that inflation had slightly eased based on the one of the key metrics that the Fed uses. So here I can read. They quote saying that the PCE index, which excludes volatile food and energy prices, increased 4.9% in April from a year ago, down from 5.2% in the year through March. So that was another thing that kind of helped market move away from the losing streak that we've been seeing in the market. The fact that we may be seeing some of the effects of the Fed's policy changes taking place already. And if that's true, then I think we're set for a good bounce. And historically, once we have those 20 big drawdowns, including the 18% drawdowns, in the months after, we see really strong returns. So that kind of gets us into the approach that the Fed may want to be taking, given that the supply chain and oil prices are continuing to kind of degrade without any reprieve in sight. And that is the demand destruction. So as you guys probably know, there's a few ways to combat inflation, which is pretty much increasing prices. One of those, and the most easier one, is to just produce more of whatever is in high demand. So say there's a high demand for oil, okay, produce more oil. There's a high demand for widgets, produce more widgets, and then the more you have, the less the price is. But in these situations where we can't really do a lot about the production, what the Fed approach is taking is trying to do something called demand destruction. And that's basically dissuading possible purchasers of goods to cut back on their spending. And if you think about that, we're taking the opposite side, right? So instead of producing more of what's in high demand, we attack the high demand from the side of the consumer with the objective of bringing those prices down, given that there's less demand for it. So as you can see here, demand destruction refers to permanent or sustained decline in demand for a certain good in response to persistent high prices or limited supply. This usually applies to oil and gas, but we can see that it may be a tool that is useful for the Fed in trying to curb some of the inflation in other aspects of the economy, given that some banks have cited that, currently, historically, deposits, people's deposits in their bank accounts that are, usually, trend around $1 trillion. And at the moment, we have $3 trillion in savings accounts, which tells us that there's a strong consumer and purchasing power out there. So if the Fed is able to curb inflation that way, as we, in the meantime, as we try to fix the supply chain issues, we may be in a good spot to see inflation go down without really hurting the economy. So yeah, those are some of my thoughts. I don't know if you guys want to chime in.
Yeah, there were some things that I was kind of thinking about. I think of the three of us, I'm the pessimist of the group. And so, I mean, speaking about like bottoming out and like thinking about like June coming up, we have one more trading day in May, but some of the things that I was kind of looking into that I kind of noticed, I'm going to try to share my screen here. Of course, you had mentioned a little bit about the CPE and the CPI. So basically the CPI is like the change in prices of goods, and the PCE is really like the change of what people are consuming, right? And so I kind of noticed this article here about shoppers are fretting, stores are listening, things like that. Basically kind of just saying how consumer
sentiment is down, and it's its lowest in like 10 years. Another thing that they kind of mentioned is like the savings rate that's like dropped and things like that. People are borrowing more money, making purchases with debt, possibly getting new cars and things like that. So I mean, essentially, like through this article, there's just like little examples about how they're not like buying Pokemon cards, they stopped buying Pokemon cards, and name brands, things like that. And so, I mean, yeah, that's rough. But obviously, I think that might have like an impact on some of the retail and spendings and things like that. This article over here is really just kind of illustrating or talking about how people are spending more. They spent more in April. I know we didn't specifically talk about that, but it was up just like a little bit, but noted that they were actually using their savings for that. So savings fell at 4.4%. Am I saying that this is going to disrupt the economy? No. Am I saying that it's going to crash the market? No. But I still know that we still can expect interest rates to rise. I know that the Fed is still looking to push that more to the 2% or maybe even 3%. And so the big question is, right? But I think overall, I think that the market is smart enough to realize that we have to go into a recession to fix what the Fed did during the Trump era into Biden's era with the whole printing of money, trying to figure out this COVID thing, So I mean, do you guys kind of feel like June is a time to buy? I mean, I think that for me, I'm still kind of just thinking too, holding on to some cash. I have JP Morgan. I researched when they're about to release earnings because I feel like the banks usually kind of give us a good idea of where we can expect some things. Their next earning isn't until July, so obviously that's like a month and a half away, basically. But how are you guys feeling about June?
I would say for me, like, I think, and you already know this, Josh, I think you already know this, Misael, but one of the things I wanted to do was just kind of take a break from making more purchases in May, just because of the volatile nature of the markets. In June is when I've been thinking about resuming like purchases. And I think what we're seeing like in the market right now, it seems like a reversal is beginning. Although I've been kind of like waiting just for more confirmation of that. I think we're going to see that on like actually next week as we test like those resistance lines. And overall, I mean, I think it's encouraging that it seems like inflation is like slowing down, and maybe as we continue to see like the Fed increase rates by about 50 basis points, that will begin to actually reverse inflation. So I don't know that. I don't know fully like if we've already reached the bottom, or if we really are, if this reversal is going to continue or not. But I think for me, June is going to be a month where I am going to resume my purchasing. So I always like stay long, but I think I'm just going to go longer, essentially for the month of June. That's my plan so far.
Yeah, I think it all has to do with where you are financially. I mean, we do have rainy day funds, so I think we were prepared for inflation, right? So I think we started cutting back on our spending like 3 months ago. I think I did, So I think at the moment, what I want to do is take advantage of that 20% discount on, your average stock that you think is a good buy. Essentially, the company hasn't changed at all. It's just the price, and the price is not always right. I think the market can be very emotional and very doesn't take too long to think. He just acts. So I would say, for example, obviously I'm a big Tesla fan. They're still growing at 30% year over year. 30% year over year growth. The margins are expected to grow. Amazon, same thing, right? They're still a big leader. There's still a lot of potential for it. Yes, they did a little bit of over hiring, but I think those companies were going to move on and just kind of take advantage of that discount that the market currently sits at.
Yeah, and also just to reiterate what you said before, if you like those stocks before at those higher levels, you were still long, and now they're cheaper. Like, why not just like start like buying more of them, right? Yeah, I've heard it said before that the stock market is like the only store where when they announce a sale, everyone walks out. So you don't want to be that kind of person who just like either like sells at the bottom or just like doesn't buy like valuable goods that are going to appreciate, or valuable assets that are going to appreciate in value in the future. But just because like the price like has declined in the short term, I think it's important not to give into fear, like we have mentioned like in the past weeks when the market like was in a downturn, because like green days will be coming. So whatever you do, make sure that you're consistent in the way that you're purchasing. Make sure that you like don't sell. Make sure that you're staying long, so that when those green days come, it won't be just the market that's green. It'll be your account that's green.
What's up, everybody? Thanks for watching Wall Street Saturday. Remember, this is for educational purposes. We're not financial advisors. If you like our videos, go ahead and like and subscribe and hit that notification bell to be notified every time we have a new video out. Thanks for watching.